Ladies and gentlemen, good evening and welcome to the Q2 FY2025 results conference call of Bajaj Auto Limited. My name is Sagar and I will be your coordinator. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the initial remarks from the management. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anand Newar, Head of Investor Relations from Bajaj Auto Limited. Thank you and over to you, sir.
Thanks, Sagar. Good evening, everyone, and welcome to Bajaj Auto's Q2 FY25 earnings conference call. On today's call, we have with us Mr. Rakesh Sharma, Executive Director, and Mr. Dinesh Thapar, Chief Financial Officer. We will begin our call with opening remarks from Rakesh on the business and operational performance of the quarter, and Dinesh will take you through the financial highlights. We will then open the forum for the Q&A. Over to you, sir.
Thank you, Anand. Good evening, ladies and gentlemen. Welcome to the Q2 FY25 earnings call, and thank you very much for joining us. Let me begin by first wishing you all a very happy Dussehra and Deepavali. Q2 has yet again been an outstanding quarter. Record revenues of 13,000 crores with a growth of 22%, driven by domestic, export, and spare part sales. Record EBITDA of 2,653 crores, growing at 24% and crossing the 20% EBITDA margin mark once again. This is the fourth successive quarter of 20% plus EBITDA, and that too with a growing EV portfolio, which now stands at 20% of domestic revenue. In fact, our green energy portfolio, which comprises the greener fuels of electric and CNG across two-wheelers and three-wheelers, are a whopping 44% of our domestic revenue. These results are an outcome of our strategy to drive top-line growth, particularly in emergent segments, while maintaining best-in-class profitability through robust operational control. Going forward, we will maintain consistency of purpose and this strategy. New growth platforms have been put together in the last 12 months. These are the two-wheeler CNG platform, the Chetak platform, the e-autos platform, and the Triumph platform. These are all opening up new areas of opportunity for Bajaj, and let's discuss the highlights of them through each discussion on each of the SBUs. Exports business unit. Overall, the steady revival in the overseas markets continues, and the number of countries which remain in stressed conditions is also slowly reducing. The LATAM region is leading world growth with a 20% year-on-year growth. Asia is now almost at par with previous year, but Africa continues to decline across almost all major markets, though the decline rates have reduced to now about -9%. In Nigeria, our benchmark motorcycle sales, as you know, used to be around 50,000 per month. It had dropped down to 5,000 in April, but retails recovered to about 25,000 levels in September. In the previous quarter, this was 15,000. So 5,000, 15,000, going up to 25,000. The recovery over there is expected to be steady, be in small steps, and we are watchful of the fragility of the currency, hence we are cautiously optimistic. LATAM has delivered a record performance with a 20% plus growth, consolidating leadership in several key countries, including Mexico. Mexico is now the world's fourth largest motorcycle market after India, China, and Indonesia. While in stressed markets, we continue to roll with the markets, protecting our channel and distributor exposures. But in recovering and growing markets, we are outperforming the industry and gaining share. Our new plant in Brazil, which had commenced production in June, has stabilized and is running close to planned levels. Further expansion of manufacturing has been initiated to ensure capacity for FY26 is increased to 35,000 units per annum levels. For this, further investments have been approved by the board today to increase capacity and prepare for higher working capital requirements. These injections will be done on need basis in phases. Overall, as expected, Q2 in exports was better than Q1, and Q3 should continue the same trajectory of a 10% plus improvement over previous quarter. However, due to superior performance in LATAM, the mix is richer. There are tailwinds supporting us on the US dollar rates. Therefore, both revenue and EBITDA growth will be better than the volume growth. In the domestic motorcycles business unit, the business maintained its strong position in the 125cc plus segment, which in quarter 2 has become 55% of the overall industry. Just to give you a perspective, 5 years back, this was 42%. So there is a 13 percentage point shift in terms of this segment over 5 years. This completely validates our approach to driving business in the growing top half. In Q2 also, while overall the motorcycle industry was flat, the 100cc segment declined by -6%, but the 125cc plus segment grew by 8%. We will continue to build our position through sub-segmenting in the top half and introducing new products for each of the segments. As we speak, today we have launched a new and attractive sporty 125cc Pulsar, which should make fresh inroads into the youthful buyer cohort. In the 150cc plus segment, as you know, we launched the NS400Z, which along with the upgraded 250s has begun to clock almost 3,000 units in retail. Both are serving to steadily expand the sporty segment in the upper half. Our market share, therefore, in the 125cc segment is at 25%, just 2% short of leadership. Since over 75% of our sales comes from the top half, this has a healthy impact on both top line and bottom line. Coming to the mileage-conscious customers and Freedom 125. Customers have given a big thumbs up to the Freedom's proposition of 50% savings on the fuel bill, its styling, reassurance of range due to the dual fuel capability, the ergonomics of the long seat and comfortable ride due to the link monosuspension. Our surveys and engagement with customers have told us that what we had intended in design is being almost exactly experienced by customer in use. We have retailed over 10,000 Freedoms till September, and we expect to hit about 18,000 plus in October, indicating good customer adoption. We are therefore increasing capacity to 30,000 per month in quarter 3 and to 40,000 per month in quarter 4, basis all the encouraging outcomes. We've also received very good support from the gas distribution companies who are trying to ensure good customer experience at the CNG pump stations. Freedom 125 continues to hold out a strong promise of absolutely redefining the motorcycle industry. In fact, we're very encouraged that other manufacturers have announced plans to introduce CNG-powered two-wheelers. This will only support the development of the CNG infrastructure and perhaps strengthen the case for a lower GST on CNG-powered two-wheelers along with other alternate fuels like ethanol and CBG. In commercial vehicles, the three-wheeler business clocked its highest ever volume of 140,000 units in quarter 2, of which 16,000 was e-autos. Our e-autos are now available in 700 plus locations, and market share in EV has increased to 35%. just a shade short of leadership. The success of our proposition of technology nahi, bharosa wahi is hitting home in our franchise, and we are in striking distance of leadership. The ICE business maintains its rock-solid performance with an overall market share of 78% in Q2. The advancing CNG infrastructure, our solid presence in it, combined with the scale-up in EVs, particularly in markets not available to us thus far, will continue to drive solid top-line and bottom-line performance in our three-wheeler SBU. Chetak is now solidly in number 3 position and was actually at an almost shared number 2 in September. What is more important to note is its momentum and trajectory, which is just from 10% odd in Q2 FY24 has hit 19%, almost doubling in Q2 FY23 to Q2 FY24 is almost a doubling of the market share. The momentum of market share acquisition should increase further with an entirely new refreshed range and upgraded range being launched beginning middle November. These upgraded Chetaks will not only have superior and competitive propositions, they will also significantly improve our margin structure. The distribution footprint is being widened further, and we should be available in about 4,000 stores by January. Our strong focus on customer care and brand development will continue through 250 exclusive Chetak stores. The new range, combined with wider distribution, exclusive customer care capability, positions us to mount a strong challenge for overall leadership in two-wheeler EVs. In Pro Biking, this business unit houses KTM and Triumph, each with a dedicated network of sales and service. KTM continues its steady performance. In partnership with KTM Austria, investments are being made to promote new categories of sports biking like motocross and train young riders for the international circuit. In fact, one of the young KTM trained riders, Shloka, won the recent dirt track motocross race conducted recently in the south. KTM made 2 significant launches in September, an upgraded Speed 4 in a new color range and an easy riding modern classic, the Speed T4 on the same well-accepted Speed 400 platform, but priced very attractively at rupees 2,17,000. Already in Q2, domestic sales were close to 10,000 units, up 50% over Q1. With these 2 new products, we expect to continue the growth momentum. The refreshed portfolio, combined with curated Triumph experiences delivered through 120 absolutely best-in-class stores, should develop the Triumph brand to be synonymous with modern classics in India. Finally, our captive finance company, BACL, continues its rollout steadily with almost flawless execution. About 70% plus of Bajaj Auto markets and stores have now been covered by BACL, both across two-wheelers and three-wheelers, and we are on track to reach 100% coverage by January 25. In September, BACL already started to post a cash profit. In conclusion, going forward, our imperatives are to drive for leadership in the 125cc plus segment through an invigorated Pulsar lineup, aggressively scaling up Freedom 125 and building the Triumph and KTM franchise. Our imperative is to continue to grow faster than the industry in e-two-wheelers through wider distribution and the new Chetak portfolio. Our third imperative is to drive for leadership in the e-auto segment. And the fourth one is to manage the steady comeback of exports, particularly in our large markets, and significantly outpace competition in the key markets of LATAM. On this basis, we are optimistic about continued top-line growth, a substantial industry-leading green portfolio, and best-in-class profitability. With this, I hand over to Dinesh.
Thank you, Rakesh. Good evening, everyone, and thank you for joining us today as always. We are pleased to report yet another record-breaking quarter, one which was marked by several highest evers, as you would have seen in our press release. We had the highest ever revenue from operations, EBITDA, spares revenue, profit after tax, without considering the effect of the exceptional item, domestic revenue, commercial vehicle sales, LATAM exports, and Pulsar exports. So quite clearly, it was a quarter of milestones on multiple fronts. Now, before I dive into the financials and walk you through what's driven this performance, let me touch upon parts of the operating context on commodities and currencies, as Rakesh has already covered in detail the context of the markets. On commodities, as we had indicated the last time around when we had spoken, you'd recall I'd mentioned that commodity costs were on a slight uptick, especially aluminum and copper at that point of time. They were heating up. But as we progressed through the quarter, we saw slight inflation across the board, led by copper, natural rubber, cast iron, aluminum, and noble metals. Steel really was the only exception that was holding quite steady through the quarter. But the good part was that as the quarter progressed, a lot of this started to ease out. And therefore, when you look at the impact of material cost inflation for the quarter, that number was about 50 basis points. Yeah, so commodity cost inflation, essentially quarter two versus quarter one, was about 50 basis points. And then if you recall, I had said on the pricing side at that point of time, we had taken selective price increases at the start of the quarter, which essentially has helped offset about half the commodity cost increase, leaving us to absorb the remaining half of the inflationary impact, which, as you've seen the margin profile for the quarter, we've been able to manage through the other levers quite well. On the currency front, the rupee has held relatively steady. Dollar realization came in at 83.8 for this quarter compared to 83.4 for the previous quarter and 82.6 same time last year. These factors have therefore resulted in our highest ever revenue for the quarter. We have crossed 13,000 crores for the very first time, a solid 22% year-on-year growth driven by robust volume expansion, record spares revenue, and importantly, double-digit growth, revenue growth on both domestic and export fronts. While volume growth was a significant contributor, what truly accelerated this improvement was also a richer sales mix. Higher electric two-wheelers, as you would have noted, electric three-wheelers that have started to add in quite appreciably, and Triumph motorcycles, all of which have higher average selling prices, which have boosted this growth. On the export side, we saw gains in Latin American markets. And you recall the last time around when we'd spoken, we'd said Latin America hit an all-time high. And this time around, we've had another successive quarter of Latin America hitting, again, a new all-time high. It's been a record quarter for Pulsar exports. That was further strengthened our overall export numbers, which registered revenues of approximately $415 million in the course of this quarter. And then, of course, there are spares which has registered and delivered another record on revenue. On EBITDA for the quarter, we also touched an all-time high at 2,653 crores, growing a robust 24% year-on-year. I think what's very heartening is that margins have continued to hold steady at 20.2%. This is the fourth quarter on the trot, where through expansions, we've continued to hold the margin at that level. And we're quite pleased about this, considering the significant investments that we've been made in expanding the e-two-wheelers business, which saw volumes move up from 40K in the last quarter to 70K in the current quarter. Also, the investment in Freedom as it starts to roll out. And of course, we had to manage, as I mentioned, half of the commodity cost inflation that we did not price out. The year-on-year, you will see a margin expansion of about 40 basis points, moving from 19.8 to 20.2. And I'd say, after looking at all factors netting off, that was largely thanks to favorable foreign exchange realization and operating leverage. While as a company, we've already spoken about it, I want to reiterate yet again as we speak to you that in the entirety of our electric portfolio, which is electric two-wheelers and electric three-wheelers, our EBITDA in the quarter has been flat in absolute terms, right? So which is e-two-wheelers plus e-three-wheelers, EBITDA put together in absolute terms was flat. Clearly benefiting from the scale-up of the very profitable electric three-wheeler portfolio and cost reduction, which we've spoken about over a period of time on Chetak, essentially electric two-wheelers. This portfolio has now sold a milestone 1 lakh units in this quarter for the very first time, which is quite significant in the journey that we've been making steadfastly towards electrification. Turning to profit after tax, we recorded our highest ever PAT. However, I want to also draw your attention to the one-time exceptional deferred tax provision that we made. So prior to accounting for the exceptional one-time cumulative deferred tax provision, our PAT was 2,216 crores. That grew an impressive 21% year-on-year. This again is an all-time high PAT performance for the company. But a quick few words on the exceptional deferred tax provision. We had put out a stock exchange intimation when the Finance Act was enacted earlier in the year. But to really talk about this, you'd be aware that the company invested surplus funds in a range of asset classes, including debt mutual funds. And so in compliance with the accounting standards, the company was making an accounting provision for deferred tax as per applicable law, taking cognizance of the indexation benefit that was allowed in the erstwhile tax regime on the fair value gains on these investments. This provision, this exceptional one-time provision of 211 crores that we have now taken in our results for the quarter, was necessitated by recent amendments introduced through the Finance Act of 2024, which specifically withdrew the indexation benefit on long-term capital gains for debt mutual funds purchased before 1st April 2023. Without offering any option of grandfathering for existing investments. Many of you would be aware that the tax rate with respect to long-term capital gains for this asset class was changed from the 20% plus surcharge and cess, which was with indexation, to 12.5% plus surcharge and cess without indexation. And so while the headline rate of tax might have been 20%, the indexation impact reduced the effective tax rate to less than half of that number. And so therefore, with the withdrawal of the indexation benefit and change in tax rate, the accounting provision for the deferred tax on investment income had to be restated. As I communicated in the stock exchange filings, it is important to emphasize that this provision is being made only to record the deferred tax in line with the applicable accounting standards, and the actual payment of tax, as you'd be aware, would be made at the time we redeem these investments. The cash outgo towards tax will therefore be different at the time of redemption, depending on the actual gain at that point of time and the actual prevailing tax regime at that point of time. Yeah. You will also appreciate and recognize that the impact of this one-time change is on the provision for tax, which is essentially the deferred tax, and so far it relates to the other income or the investment income and is not relating to the operating performance or the operating profit of the company. Post this one-time exception deferred tax, headline profit after tax came in at 2,005 crores for the quarter, but importantly, ahead of the 2,000 crore milestone that hasn't been hit very often, but only on a couple of occasions in this last little while. As for our cash generation, the track record remains strong. Over 2,000 crores of free cash flow was added during this quarter, and our surplus cash now stands at 16,400 crores, a very robust position that allows us to continue to be able to invest in strategic growth enablers. In the first half alone, we've invested about 1,200 crores, with about 955 crores going into Bajaj Auto Credit, as per plans, and the remaining pretty much in the form of capex, primarily for our electric vehicles business. Let me now spend a couple of minutes to talk to you about our consolidated financials, more specifically consolidated profit for the period. Now, you've seen that we reported a consolidated PAT of nearly 1,400 crores compared to a standalone PAT post the exceptional deferred charge of about 2,000 crores. This sizable gap of nearly about 600 crores primarily arises from the accounting of our share of the losses of Pierer Mobility, PMAG, and associate investment of the company. Again, a stock exchange information was put up, but let me spend a couple of minutes to clarify this. Our holding structure, to set a little bit of a context. So you'd be aware that Bajaj Auto Limited has a wholly owned subsidiary in the Netherlands called BAIHBV, Bajaj Auto International Holdings, which in turn holds a 49.9% stake in its associate, Pierer Bajaj AG in Austria. The remaining controlling stake in PBAG is held by the Pierer Industries Group. PBAG in turn holds 74% stake in its subsidiary Pierer Mobility, PMAG, which is the listed holding company of brands such as KTM, GasGas, Husqvarna, and Embryo Gusta. Thus, effectively through PBAG, Bajaj BV, which is our wholly owned subsidiary in the Netherlands, holds a 37% stake in PMAG, and Bajaj BV's results therefore form part of our consolidated financials. Now, as many of you would be aware and would have tracked, PMAG published its results for the half year, which is essentially calendar half year 2024, on 23rd August. And in terms of the results for that period, which is the first half of 2024, PMAG reported a loss of euro 172 million for the first half, in contrast to a profit of 53 million for the corresponding first half of 2023. Right? So a loss of 172 million euros. And so as per the results announcement of PMAG, the reasons ascribed are essentially economically volatile and difficult conditions that led to the significant negative results in H1 2024. The main drivers really were the decline in sales due to the challenging economic environment, particularly in the US, and that indeed has impacted our exports of KTM motorcycles this last quarter. The other challenge they seem to have had is expenses in connection with the restructuring of the bicycle segment, as well as the production and personnel costs in Europe, which are inflating. And for those of you who are interested in a deeper dive on what's underlying their results, you will find that on their website and in their public filings. But as per accounting practice, we've had to consolidate our share of PBAG's results. We do it twice a year, aligning with PMAG's half-yearly financial reporting, and therefore the loss of the 172 million euro announced by PMAG translates to a loss of about 60 million in our consolidated financials, and about 580 crores that we attribute to PMAG's results. It is to be noted that this matter pertains to the business and operations of Pierer Mobility AG, and the material impact on our results coming through the BHBV route arises really from accounting requirements, which require us to recognize the corresponding profit or loss relating to an associate company. So that is indeed a very significant hit that we've had to take this quarter, given the challenging context on the PMAG end. Finally, a quick word on the other subsidiaries, our captive financing arm, BACL, and our subsidiary in Brazil. And you've heard from Rakesh that we are making very good progress on both fronts. BACL has made a very definitive set of progress and now services approximately half of our network. Assets under management of BACL at this point of time stand a tad above 4,000 crores. And the plan is to really complete the national expansion by Q4. Our Brazilian subsidiary is also making significant advancements. With the assembly plant now fully operational, volumes have continued to step up, and we've nearly hit the rated capacity of the plant, and likely to be so in Q3. At its meeting earlier today, the board has approved a further investment as capital infusion of 10 million in a phased manner to really fund for business expansion and the needs of the growing business. The current capacity of the plant in Brazil, if you would recall, as we put this out, was 20,000 units annually, and so a fair amount of this investment that we will likely send across to Brazil in a phased manner will be to fund for expansion beyond 20,000 units. Looking ahead, you've heard, focus areas are very, very clear. Competitive growth in festive season, unlocking capacity and scaling up Freedom, further gains on the electric portfolio, recovering exports, particularly in Nigeria, and of course, growing Triumph. And of course, within all of that, looking to sustain margins through the continued dynamic P&L management, while we continue to invest quite substantially behind the electric portfolio, most notably on Chetak, and on strategic bets like Freedom. In terms of the commodity landscape, I think in overall terms at this point of time, it's looking pretty balanced as we move into the next quarter. Some watch-outs on rubber, polypropylene, and platinum, but there are others which are looking to be stable to benign. So on balance at this point of time, the outlook for commodities for this current Q3 looks to be relatively flattish. With that, let me hand it over to Anand and open up the floor to Q&A.
Thank you, Dinesh. With this, we can open the forum for Q&A.
Thank you very much. We will now